Hi traders, and welcome to my video on the Black Marubozu candlestick pattern. In this video I'm going to show you how you can use this simple candlestick pattern to help you capture moves such as this one for over 500 pips. Okay, so I'm using the MT4 MetaTrader 4 trading platform. This is a Euro-Dollar 4-hour chart. Okay, you can find the Marubozu candlestick patterns on any chart time frame. I just find candlestick patterns tend to be more reliable when there's more price data included within them. So I'm looking at the 1 hour, 4 hour, daily, weekly, monthly charts for these type of signals. Okay, it also means less time chart watching and the opportunity to capture big trends like this one. Okay, so you can also find these patterns on Forex, cryptos, commodity stocks, indices, bonds, etc. So the first thing I do is I'm going to look for a trend, okay? Because we want to take the Black Marubozu candlestick pattern in line with the trend, okay? And this is a bearish candlestick pattern, okay? It is called the Black Marubozu, but we can call it the red one if we like, because I have my candles or my bearish candles marked red here on the chart. So the first thing to do is to identify a downtrend, okay? So you can see this nice wedge formation here. This price reached resistance up around this point, okay? It's a triple top formation when the resistance is tested at least 3 times. And then the price moved to the downside, broke below this support line here, this trend line, which signaled a reversal to the downside. Okay, and after this level of support here was breached, okay, you can see price closed below this level of support, and then we get a strong downwards move. So we could have traded the breakout here had we have got in that trade. Potential of over 400 pips. Okay, we could have used a trailing stop. My initial stop loss would have been above this high here. So you're looking around 20 to 25 pips. Would have used a trailing stop as price fell down. I would just be moving the stop loss above the recent highs just to lock in the profit. Okay, in case price turned around, we're still going to bank plenty of pips. We can maximize the move as much as possible. Okay, with the one good entry, we don't need to keep exiting. You know, I wouldn't have a 20 pip stop loss and then see the price drop 60 pips here, get excited, 3-to-1 risk to reward ratio, close the trade and miss out on all this profit potential. Of course, you can re-enter, but every time you re-enter, you risk getting your entry wrong and you have to pay more in terms of broker spreads, commissions, potential slippage, etc. So just want to capture the one big move. That way, even if we do have our stop loss taken out multiple times, with a relatively tight stop loss around 10, 20, 30 pips, depending on where the high is. Okay, sometimes it may be 10 pips away, 20 pips, may even be 30. But with relatively tight stop loss, we can afford a few losing trades, knowing that when we do eventually capture a big trend like this, we can make back those losses and then some more. Okay, so the Black Marubozu candlestick pattern is a bearish candle, a big bearish candle where the wicks are relatively small. Okay, if we just zoom in here, once we know there's a downtrend after the breach of this support line, we can start looking for them. Okay, this you can see the big bearish candle, reasonably small wicks. Okay, so that could have been used as the Black Marubozu in this instance. And how you trade it is when price breaks below the low of the candle, that's the entry signal. So you can see this would have been a good entry here. We had the resistance level. The market was making these lower highs. Okay, we've seen the price drop, break this support line, break this level of support as well. This could have been this level of support. Okay, nice M pattern formation there. You see the M breakout below, price closed below this level of support. Okay, so bearish signals there. And then the Black Marubozu, we can trade the breakout of the low of the candle there. Okay, this is perhaps the aggressive entry because we're getting in at looking to get in at the start of the trend. There is a chance that the market may have just headed back up or consolidated for a while longer. In that instance, we just use sensible money management. I like to cut losing trades short and let winning trades run, as I said. So then as the trend continues, we're going to look for more Black Marubozus, but the thing is we're not going to look for them you know, after a run like this, you're going to want to wait for a pullback first, okay? So here's a pullback, and this is a big bearish candle. However, it's not a textbook Black Marubozu candlestick pattern, okay, just because of this long wick here. And this is why I don't rely solely on candlestick patterns for trades. I mean, I would have quite happily have taken that as a breakout trade, regardless if that is a Black Marubozu pattern or not. Okay, that being said, there is one here. Okay, you do have this pullback as well. So this bearish candle, we could have just marked below there. Okay. Whoop. If we would have just marked the low of that candle, this candle, okay, bearish one, smallish wicks, could have traded a breakout there. Okay. Although probably, to be honest with you, I would have been looking more at drawing my support level like this. Okay. You can see the market's making these lower highs. Wedge pattern formation here, consolidation, and a breakout to the downside. This is an NFP candle, non-farms payroll, first Friday of the month, hence that big drop down there, but we could have used the momentum regardless from that to have entered this downwards trend at a favorable opportunity. Okay, as the trend continues, you can just keep your eye out for these Black Marubozus. Remember, you ideally want to find them after an upwards move. Like there's one here, for example. Okay, you see that candle there? Big bearish candle, barely any wicks. However, at the end of that move, you don't necessarily want to sell after that. So if you just wait for something like this, an upwards move, okay, then you can see another one here. And you can just mark the low of the candle. And a breakout almost instantly below the low. Could have been an entry into the trend there. Okay, but I feel like there's an opportunity that would have been missed here. Okay, we didn't necessarily have the Black Marubozu, but you could have clearly have seen this is a strong level of support here. It's tested multiple times, and then when price does break below this support, it holds up well as resistance. So I would have been quite comfortable trading a breakout on this, regardless of there being the Black Marubozu. We do actually have a 3 inside down candlestick pattern here, which is basically a bullish candle followed by a bearish candle, which is at least 50% of the bullish candle's body. And then another bearish candle which breaks below the low of the bullish candle. So that could have been a candlestick pattern signal there as well. Okay, if you just rely solely on one particular candlestick pattern for entry, you're going to miss opportunities. I don't always look for candlestick patterns. I can confidently take a breakout trade as long as, you know, I'm trading in line with the trend and just timing my entry on a pullback and a breakout. I'm quite confident with good money management we can make plenty of pips, especially on the longer term chart time frames. As I said, signals tend to be more reliable from my experience anyway. But continuing on with the downtrend again, potential Black Marubozu here. You just might have wanted to have waited for a better pullback, but yeah, still would have been a reasonable trade. However, something like this, after this big drop down, then the pullback, then we can start looking at the candles more closely. Arguably here, slightly long higher wick. Nonetheless, could have potentially took a trade there based on that one. Got the lower highs, wedge pattern here. And as I said, this is a 4-hour chart, so there's plenty of price data in there. I'm sure if you went down to the 5-minute or 50-minute chart, you would have seen a lot of bearish action to confirm this. We've also got the inverted hammer, bearish inverted hammer there as well. So the signs were there. As we know, the overall trend was down as well. We just want to be careful by this point that we don't end up selling too low. Okay, when we've already seen a big move like this, we don't want to sell towards the low. That being said, it does continue all the way to where we are now. However, had we been trailing the position, okay, with the trailing stop above the highs, we may have been taken out when the price, say our last trailing stop from the initial entry was price dropped, say here, and we had a trailing stop above this high, we may have been taken out around here. But then after we see this big pullback, we could have always re-entered on this nice M chart pattern, breakout to the downside there. Yeah, you got that doji at the top, got the resistance. So the signs were there for a continuation. And if we didn't jump straight back in there, yeah, you had a pullback here. Okay. And then after that, pull back, you can just look for your Black Marubozu. As I said, it's not a necessity for me. I would quite confidently have looked at that level of support and traded this breakout here. In terms of a Black Marubozu, potentially this one could argue, although perhaps a longish lower wick there. Nonetheless, did have a level of resistance. So a potential break below the low of that candle there. Could have been a early entry into the trend continuation. That's what we're looking for, basically. Black Marubozus for me, I'm going to look for a trend and look to enter into a continuation of the trend. Whether that's early on the first pullback or we just wait for a more established trend, either way, the principle is the same. Okay. And around a pullback, don't forget, so we don't take Black Marubozus at the end of a big rundown. Okay, we're just going to want to wait for a pullback. Okay, as you can see after this move down here, there is a pullback, and see this candle here is a bearish one, small wick, so we could have used the low of that as a guide for trading a breakout there into this trend. And in fact, that level of support there is actually come resistance over here, but not necessarily because of the Black Marubozu, probably more because of the price action we see here. Okay, so as I said, I'm not relying solely on candlestick patterns for entry, but they can give additional confirmation. You can see with this big trend here, ample opportunity in the space of a couple of months to bank lots of pips. In fact, the whole trend really from there downwards, you're looking at over 600 pips, ample opportunity to make some pips. You can of course close part of the position on the way down. We're looking to hold for as long as possible. Make sure you time your entry, use good money management, of course. Have your trading discipline in check, so don't let fear, anger, or greed get in the way of your trading. Don't FOMO, fear of missing out, and revenge trade. Take a step away if it's getting too much. When you trade in the higher chart time frames, no need to stress yourself out chart watching all day. You can just check it every now and then, see how things are progressing. Okay, well, hopefully that's given you an overview of the Black Marubozu and how you can implement it within your trading strategy. I do appreciate you watching. If you could like and subscribe, that'd be great and really help my channel. I hope to catch you on the next one. Take care.